the ratio, that's one thing. It's really all about inflation. And the one thing that the Federal Reserve did not have to really tackle during the last time they did quantitative easing and then began to taper the amounts of their allocations of assets is this enormous inflationary rate. And that kind of changes or puts a twist to it. And the reason being is right now the CPI is projected to come in on Wednesday, not the core, but the regular CPI at 7%. And so it's going to make a more aggressive Fed. And so what's happening is gold and silver have an extremely bullish affiliation with inflation. To this date, they are probably the best hedges against out-and-out inflation. We're experiencing that globally. And so we're creeping up to numbers that we haven't seen in 40 years. And so that obviously is going to be a bullish kind of a tailwind for both gold and silver pricing. We saw gold break back above 1800 today. It's currently at about 1804. We saw silver a little tepid, but now in the aftermarkets, I believe up another 40 cents. And so it's getting closer to 23 again. And what I think we will see is we will see a spike, some sort of spike, if the forecasts of inflationary pressures come out to what the analysts are projecting, which is the core CPI, where they strip out energy and food costs to go from 4.9 to 5.4. It's one of the highest they've ever seen. And the standard CPI, which adds in energy and food costs going to 7%, that's a 40-year high. That could really force the hand of the Federal Reserve to raise rates much quicker or sooner than anticipated. But that also has a double-edged sword. And that is, they have been tapering, and they even started talking about a reduction in the asset sheet that they have. I think that their assets right now are at either 8.7 or 8.9 trillion dollars, and talking about reducing it. Now, they tried that back in 2014 when they swelled it from about just under a trillion to about 4.5 trillion. And then they reduced it. But by the time they got to 3.7 trillion, their belief was that any further reduction of that balance sheet without quantitative easing adding liquidity to the market would really stifle the economic recovery that was now in play during the banking crisis back then. And we have a similar action now, but with much higher inflation. And so I titled my opening letter today, The Relationship Between Inflation and Gold is a Double-Edged Sword, but each edge is honed to a razor-sharp level. I mean, we haven't seen inflation like this in the United States. I don't know what it's like in Singapore, but I know throughout Asia it's a lot higher. Europe is experiencing it. Inflation is not a national thing, but it's a global scenario right now. And the inflation is much higher than what we experienced back then. That, of course, will lend itself to prop up gold and silver prices. However, the Federal Reserve, at least in the United States, as well as the European Central Bank and banks worldwide, globally, are trying to control this spiraling inflationary surge that we're seeing by ratcheting up interest rates quicker than they anticipated. Now, they're starting from next to nothing. Right now, the Fed funds rate is between 0 and 25 basis points, 0.25%. They're talking about raising it in 0.25% hikes. But originally, the first perception was, oh, we'll have no interest rate hikes in 2021, 2022. We'll have the first one in 23. Then that changed to 2022. We'll see two. The latest consensus, and the market, I believe has already factored this in, is the real potential for 4 rate hikes, which means that they'll jack up the interest rates here, the Fed funds rate, by a full percentage point in a single year. And I think that, along with tapering, will stifle the economic recovery. So they're really pressed between a rock and a hard place. They're backed against the corner in that they made the mistake in letting inflation run too hot without doing anything. These are extraordinary times calling for extraordinary measures, which is why they kept their monetary policies worldwide so accommodative for so long. We're recovering from something that I've never seen in my lifetime, and I've seen recessions, but not ones created by a pandemic. And every time you think the pandemic has ended, something else happens. Some variant shows up. In fact, I read about Singapore and their success with the Moderna vaccine, really having it result in the lowest deaths since the pandemic started in Singapore. I read that today. So that's something that you're more aware of than I am. But these are extraordinary times. And so the outcome is going to be based on that push and pull scenario in which inflation beckons higher silver and gold pricing, and raising interest rates does the opposite thing.
Yeah, it's interesting with the points that you just laid out because we just had them miss the jobs numbers, and if these CPI numbers are fairly high or higher than normal, and Powell has to really get on the gas and raise inflation rates as early as March, let's say, you could expect gold and silver prices in the short term to really start to rev up and move up.
Absolutely. I think that if the inflationary numbers that are projected are the actual numbers that come out, and they've been pretty close. They've underestimated it in October and November, or for November, they got it right on, and that was 6.8. They projected 6.8. They're now projecting 7%. The core at 5.4% from 4.9% is a huge jump up. And so that combined with a really tepid jobs report, they were looking at getting about 400 plus thousand jobs, and they got about 200,000 jobs. So those things combined present problems for the Federal Reserve, because how do you keep an economy recovering when the labor force is still needing a lot of workers coming in? There's still issues as far as the pandemic is concerned. We have the highest number of cases ever reported. The good news is this new variant seems to be less harmful, sending less people to the hospital and things of that nature. But we hit it's an absurd number. I don't even remember, but it was an incredible number that we had last week of